President Donald Trump announced a 50% tariff on copper imports that has led to a spike on the futures, reaching an all-time high late afternoon on Tuesday, up at 589.55. This highlights the critical shortage of domestic mine, smelter, and refining capacity within the United States. Since then, futures have stabilized around the 550 mark. Now, the tariff could have widespread implications as various sectors rely on copper. Consequently, it may complicate the Federal Reserve's ability to lower interest rates in the future due to rising inflation costs associated with the spike in copper futures. The overall impact on copper will depend on the specifics of the tariff, including its application and potential for any kind of exemptions. Now, in the wake of Trump's tariff announcement, gold prices experienced a decline before rising back to unchanged, particularly as the August deadline for reciprocal tariffs remains. The news alleviates some of the concerns regarding a worst-case scenario for global trade, reducing demand for gold as a safe haven asset. Further, the rising yields in U.S. Treasuries have also put pressure on gold as investors grow less confident about the potential for interest rate cuts from the Federal Reserve by year-end. Looking at various metrics, we're looking at the potential for an interest rate cut, the first one happening in September and then the second one happening in December. Now, there's no telling the depth of those particular interest rate cuts, but many analysts are looking for 2 to 3 25 basis point interest rate cuts by year-end. Looking at the silver market, it has begun to stabilize within a bull flag. After rising about 25% for the first half of 2025, it's closely shadowing gold's 26% increase. This leaves the gold-silver ratio right around 90-1, and demand for silver has really reflected the bullish sentiment in the market. However, the retail investment for silver has experienced a divergence, with Indian demand remaining strong. U.S. retail purchases have really declined recently, highlighting some selling going on by investors as we get closer to the top end of a bull flag.